And people feel a bit disillusioned that we're straying away from what we came here for. That's what Zcash represents. And that's why it's up so meaningfully, so quickly. And I think it'll continue going forward. My price target is 10% of the value of Bitcoin is what I'm targeting for my Zcash stack. Does that mean I'm going to sell it? No. Again, as Naval said, it's insurance against Bitcoin. If I believe in Bitcoin, and I do think there are some reasons why you want to have pseudonymous addresses to prove that things happen, especially if you want to have governments start using Bitcoin. I want to prove that they actually paid for things versus cash where they can, hand the briefcase over to the terrorists and then claim they didn't do anything. Well, I think that we need Zcash, and that's why people are recognizing this, and there's a grassroots movement support it. And we've seen, a massive rise in the price, and I think it's got further to go.
Hey guys, welcome to Everyday Finance. Extreme worry has been sparked by Bitcoin's turbulent week, yet underlying the terror, a whole other story is developing. According to on-chain data, even when the price dropped below the crucial $90,000 mark, big investors' whales holding more than 1,000 BTC have been gradually building up since late October. These wallets just fell to an all-time low. But their strong recovery suggests that the big players see the decline as a chance rather than a catastrophe. Smaller holders, meantime, are giving up. The number of wallets with at least one Bitcoin has fallen to all-time lows, revealing how retail trust has crumbled under the strain. The question of whether traditional giants are selling or if whales are taking the brunt of the panic has been raised. By the growing gap between whales and regular investors, both forces, according to analysts, are interacting. Particularly now that the market is already tense due to recent Federal Reserve signals. Many industry commentators, however, contend that Bitcoin is on the verge of a bottom and see the current levels as a generational opportunity bolstered by strong support zones, escalating whale accumulation, and extreme sentiment.
Yeah, so obviously everything is entry-level dependent. If you've been in Bitcoin for a while, you're not that fussed about sort of the lackluster performance, but because we're humans and we like to make these artificial delineations of time, in terms of January to November, whatever it is, then people are a bit like, oh, why isn't Bitcoin the best performing thing in, the 11 months of 2025? Why is it gold? Why is it Nvidia or whatever it is, right? And they forget that for those of us who've been in this game for a while, that Bitcoin's been the best performing asset of all time, especially given the debasement of currencies around the world. But back to this year, we think about the main events of this year. The first was the inauguration of U.S. President Trump. And I came out with a call back in January of this year, basically being like, well, where is the impulse for spending money? Where is the printed money going to come from? Trump's promising all these things. Can he actually make good on them? Obviously, the hype was massive. We had the Trump meme coin launch. And then just like we're in a simulation on January 20th, pretty much the market peaked and it was down. And the April Liberation Day was sort of the icing on the cake in terms of Bitcoin poor price performance, where we get down to like 74,000 on Bitcoin. And then those of us who, had cash available were able to capitalize on sort of the Trump taco trade in terms of the trade negotiations with predominantly China and the rest of the world. And obviously, if you've been invested from April 9th until the present, you've done very, very well in Bitcoin and gold and some other things. And now if we come to the fall, I posted a chart maybe a week and a half ago, and it was my liquidity indicator, starting with the debt ceiling raising of the debt ceiling in July 4th of 2025 this year. And myself and other macro analysts pointed out that the Treasury under Buffalo Bill Bessent had to raise cash to refill its coffers. And they've done so to the tune of about $1 trillion on a net basis. If you take a look at the Treasury General account, over the same time period, there wasn't really any new source of dollar liquidity being pumped into the system. And we also saw stress in the funding markets, meaning that cash is tight within the US money markets. And Bitcoin pretty much was down 5 or 6%, in line with dollar liquidity down 5 or 6% from July. And so the question now is, okay, well, the government's been shut down. The Treasury's issued way too much debt. They haven't really spent any money over the last, 40 days, however long it's lasted. And now that we expect this to end, because I guess the Senate voted, or maybe the House voted, I don't know which one, The treasury is going to get back to doing what it does best, printing money and spending it on stuff, on goodies. Now, you might not like the goodies that they're spending the money on, but we don't care as crypto investors. As long as there's more dollars being created, our assets are going to benefit, predominantly Bitcoin. And so I think that this is the time now to start getting ready for the real show of Trump and Besant. Now, for those of you who watch the U.S. elections in the various cities around the United States, the Democrats had a very good showing. And essentially their message was free shit and anti-Trump. And I think what people forget is that U.S. President Trump is one of the biggest free shitters out there. He did the biggest free shit giveaway, the helicopter money COVID stimulus checks, which prompted Biden to follow suit. So I know that the team red Republicans like to throw these words, socialism, and that's, a dirty word in American politics around. They're just as socialist as the Democrats. It's just that they hand the money out to big corporations and the Democrats hand it out to migrants. It doesn't matter. We don't care. Take your political ideology out of it. Express yourself at the ballot box. If you want to make money, it doesn't really matter where the money's going. It's just that it is created and Bitcoin benefits. And so I think that if the team red Republicans want to have any shot of winning the U.S. midterm elections next November, forget about China, forget about trade war. It's all about printing money and handing it out, whether that's to build weapons, to build rare earths, to supercharge AI, all the things that the Republicans like to fund. They're going to print the money to make sure that happens, and so that their constituency feels the love going into November and shows up at the ballot box. And that's what 2026 is all about. And now we have this awesome opportunity to get in before it's crystal clear that they're going to print a lot of money. Right now, there's a little bit of uncertainty about, is there going to be enough liquidity? Are we at the top of the 4-year cycle? This is a time now to deploy capital for an amazing 2026. Zcash, I remember 2016, and I was deep enmeshed in Zcash. It was the hottest project at crypto at the time. Very focused on privacy. It was a big narrative. And BitMEX was the first trading platform of any type to launch a pre-market Zcash futures contract. It really elevated our stature in the crypto markets, the price action around this thing. And when it eventually listed in 2016, I think it was December, because of how the mining rewards worked, and I know your chart only goes back to 2021 because it's probably Binance or somebody. Yeah. If you go back, or Coinbase or whatever, if you go back to the Genesis block in 2016, you'll see that the price spiked to something like $3,000 per Zcash on Poloniex or something like that. And that was due to, there wasn't a lot of supply on the market. So if you want to talk about the low circulating supply games that we play today in the shitcoin market, Zcash is one of the first really to go hard at this. And that's because there just wasn't enough coins because of how the mining worked. And so you had this big spike, and then obviously the price collapsed. There were some things that were not optimal about how they were conducting privacy, the trusted setup, the lack of any supply that was using these shielded addresses. So it was basically just another version of Bitcoin with, this possibility of privacy. Fast forward to today. And obviously I wasn't the first one on this. You have people like Naval and others who've been involved in the Zcash ecosystem a lot more intently than me. I'm kind of a later stage kind of guy. I mean, I definitely made some X's on this one, but I definitely wasn't the start of this move. And what is the narrative that they're pushing? Okay, well, if we have AI and if we have all this compute power, we're going to be able to de-anonymize Bitcoin transactions. And even Monero transactions. Japanese authorities have been able to do that, if you believe a particular news article. And what do we have in our stable of shitcoins that's going to be able to give us privacy if we have all this compute power that can essentially figure out who owns what Bitcoin via metadata, via anything that you're putting online, via on-chain transactions? And of course, the authorities will have access to all this information. And so if you care about privacy, then it behooves you to have a certain percentage of your stack in a token like Zcash. And that's the big narrative. And also there's this whole narrative of Bitcoin's been taken over by TradFi. TradFi can't trade privacy coins. I tried to buy some Zcash on the first rip, and like 6 out of 8 of my brokers can support it because they are not allowed to trade privacy coins. And the fact that TradFi is not allowed makes it even more appealing to the grassroots crypto enthusiasts who feel like this whole movement has sort of been co-opted by BlackRocks of the world and XYZ Bank launching some sort of derivative product, DATs, all this sort of stuff. And people feel a bit disillusioned that we're straying away from what we came here for. That's what Zcash represents. And that's why it's up so meaningfully, so quickly. And I think it'll continue going forward. My price target is 10% of the value of Bitcoin is what I'm targeting for my Zcash stack. Does that mean I'm going to sell it? No. Again, as Naval said, it's insurance against Bitcoin. If I believe in Bitcoin, and I do think there are some reasons why you want to have pseudonymous addresses to prove that things happen, especially if you want to have governments start using Bitcoin. I want to prove that they actually paid for things versus cash where they can, hand the briefcase over to the terrorists and then claim they didn't do anything. Well, I think that we need Zcash, and that's why people are recognizing this. And there's a grassroots movement support it, and we've seen a massive rise in the price, and I think it's got further to go.
Global markets are trembling outside of cryptocurrency as concerns about an AI-driven bubble spread to equities and other digital assets. As investors start to wonder if the AI bubble has outpaced its fundamentals, months of skyrocketing valuations have given way to skepticism. U.S. tech equities have fallen below important metrics, and worries have been heightened by the Nasdaq's decline. Uncertainty over when, if at all, these enormous investments will result in actual profits is increased by high spending on AI development. Japan's Nikkei fell more than 3% as a result of the global shock, which also affected European markets. Bitcoin has not been immune to the volatility. Following its spike to $125,000 last month, it has dropped back below $91,000 as risk aversion wanes. Analysts see that investors are reevaluating anything associated with speculative growth narratives, replacing the excitement that once propelled both tech and cryptocurrency.
Specific types of altcoins are dead. I think we had some amazing price discovery in that 1010 crash. Essentially, you had a large swath of the alt universe, which was just a market maker circle jerk. They pretend to provide liquidity. We pretend that it's worth whatever fully diluted valuation. When the market maker leaves, there's no organic demand for these pieces of shit, and they're worth 90% less than what we see on the screen. So great. We know what most of this ecosystem is worth, zero. And people should treat it that way. Now, today, just recently, Uniswap put a proposal forward to turn on a fee switch, and Uni's up 30% in a matter of minutes on the announcement. Now, what does that prove? If we have protocols, and we do have these, that have real clients, Uniswap has real clients that pay real money, people spend, things other than Uniswap and Uniswap to pay for fees. And finally, we're going to get some of that money back as token holders. Now, that's great. That's why Uniswap is pumping. That's why EtherFi is doing well. That's why Athena is doing well. That's why Pendle is doing well. These are projects with clients. These are projects with revenue. These are projects that profit goes back to the token holders. That is the altcoin season that we're going to see, I think, in 2026. Now, whatever other piece of shit that you own that has no clients, a bunch of hype, Binance Launchpad, paid a bunch of KOLs to shill it, market maker was there, then they're not, then it's worth 90%, and you got liquidated. Sorry, that's a dog shit piece of shit. Again, this is all my opinion. Everyone's investment philosophy is different, right? I'm coming from a stance of capital abundance, so I'm more concerned about capital preservation than appreciation. Like Zcash, I was late, right? I didn't buy Zcash at $20 before, or $30 before the recent massive move. I bought it in the hundreds, right? I heard about it late, but I don't want to be early and be down 100%. So that's just how I approach things. So if I am going to be late and I want to be able to deploy a significant amount of capital and feel safe about it, safe in relative terms of crypto, then I want to see some profitability. I want to go on Token Terminal and look up, okay, who's making money? Who is putting that money back to the token holders? It's a very few projects that are doing that. Now, is this a project that's going to go 100x in the next 2 weeks? No. So a lot of people are like, no, that's not what I want. I am on a very low salary. I've got a little bit of savings. This is what I believe is my only way to escape the inflation trap that's been hoisted upon me by every single government around the world. YOLO this shit. I want to go along something that's going to go up 100x in the next 2 weeks. Well, then you're going to get shit that goes down 90% because the market maker went away. So that's the game people are playing. It's a very rational game. I'm not, trying to throw shade on them. I understand why people view this altcoin speculative game as a way out of a shitty situation that governments around the world have put themselves in, put the people in. But again, That's, that comes to the game. If you want to get 100x, you got to be able to suffer bagels. So there are a subset of very integral firms. You probably haven't heard of them before. Maybe you have, but they're in the background. They're not the Binances, the Coinbases, the Krakens of the world. They generate high margins, 50 to 75% EBITDA margins, good revenue, 25 to $100 million revenue companies, founder led. And, they have no tokens, which is great for this equity play. And so our thesis is that there's a lot of capital out there that wants to play in this particular niche. They've gotten burned in the liquid VC. They've gotten burned in early stage VC because they've just underperformed Bitcoin and Ethereum. So we're saying, hey, let's get back to basics. We're going to target companies that make cash. There's no token. We have a stable of really credible operators who can come into one of these companies. We can give the founders a nice exit. They can go off into the sunset and enjoy their lives. And we can come in and polish these companies up, and we can get a multiple expansion. We can sell them on to a larger PE fund, or we can do some sort of public markets situation. And so that's why we launched this particular fund to service this very specific niche. We're mostly concerned with infrastructure, not specifically, not exchanges. So data players, API connectivity, stuff like that. Stuff that's a little bit less sexy. And again, no token, because we want a clean cap table to affect this strategy that we're doing.
All eyes are now on NVIDIA's next earnings, which are anticipated to be crucial for both tech and cryptocurrency sentiment, as markets are on edge. After months of unbridled euphoria, some analysts contend that the drop is a good reset and a required cooling spell. Others caution that unsatisfactory outcomes might be the beginning of a more significant correction. Voices like Arthur Hayes, who contend that upheaval frequently creates the conditions for significant opportunity, highlight impending money printing regulations and a possible Bitcoin frenzy in 2026 amid the uncertainties. Long-term investors are keeping a careful eye on this situation because they know that changes in sentiment, liquidity, and institutional behavior could determine the next explosive chapter in Bitcoin's history. Regardless of whether it is a brief tremor or the start of a bigger storm,